For the past few weeks, we've been anticipating a major corrective period here for Bitcoin. And as we head into November, there are several things that do suggest that, well, the correction is likely to continue on. So I do want to be focusing on exactly where I'd be looking for on this correction to likely end, and some objective signals that can give us some indication as to where things are likely to go in the more sort of short to medium term, mostly for the month of November. So as always, we're going to start it off with a revisiting of the daily price action statistics, which I want to get my notes up on over here. My notes are ready. And we can see from the daily price statistics, Tuesday is slightly in favor of negative closures versus positive closures since this bull market began in 2023. Not really that crazy right here with 51%, although I do think today will very likely be a red day, just like yesterday as well. Whoops, sorry about that. Hitting the microphone, hitting that massive dildo in front of my face before we deep throat it. And then, as always, we're going to be interested in the average loss and the average gain for winning and losing Tuesdays. So on winning Tuesdays, which I highly doubt today will be, but if it were to, we'd be looking at an average area of interest at around about 108,700, meaning that if Bitcoin does, by some act of God, pop back up there at the end of today, or just at any time really today, I would be looking for a pullback on the first pass. And of course, to the downside, that would give us an area of interest at around 104,750. Bitcoin's already traded much below that. And of course, on that first pass, if you were actually watching this and you had access to this indicator script, then you would have seen a very likely a very, very short-term time frame bounce, which was probably scalpable. Now, on this current move, I would suggest that, hey, if you missed that first one, don't go for the second one. But yes, as we have postulated before, there is another way to play this for another sort of scalpable opportunity. Personally, I think that this is much lower probability, but when you see price deviate from one of these ranges, in this case, the bottom side range at 104,750 by a lot. And when I say a lot, it's got to get like way down here, like kind of like, as you've already seen, down to about 102,900 or so. When things deviate that much, they're more likely to crawl their way back closer, maybe not exactly to, but closer the average returns range. So that would be 104,750 in this case. So yes, you could have scalped this move back down around here, especially on the retest of that Friday, that deadly Friday low from the 17th of October. And yeah, if you did take that as a scalp, hey, congratulations, but I would not be taking the next one. I'll put it that way. I definitely would not be taking the next one. Anyways, as promised, I do want to get into some monthly statistics here pertaining to the month of November, as I have actually constructed a playlist just going over the monthly, price data. And let's continue on with the tradition here, because we haven't done this yet on a on a standalone video for this November at least. And we can see that November actually is certainly in favor of positive closures versus negative closures throughout the full history of Bitcoin. In fact, the past 2 Novembers have been pretty big positive closing months. Anyways, 10 out of 15 of all Novembers in Bitcoin's history have been positive closing Novembers. So that is a win rate, a positive rate of about 66.6666666, repeating of course, probability to be a positive closing month, which is rather good. Remember, we actually did see September close green, so generally Q4, when September is green, actually is a green time. Doesn't necessarily mean that every month has to be green, but one of them at least has to be green, and probably massively at that. But as of right now, yeah, things are looking, at least in the short term and medium term, angled to the downside. Anyways, for those winning Novembers, the average return has been about 22.80%. The median, however, significantly less than that at about 12.82% right there. On the other side, for losing Novembers, it's lost an average of about 17.34%. Again, the median a little bit below that, not that much of a deviation here, so it's probably more accurate at about 16.23%. So putting that into context on price action, if Bitcoin were to play out the median win from today, or sorry, not from today's open, but from November's open, which I do think is a little bit less likely, or at least seeming a little bit less likely to me right now. 12.5% to the upside will put Bitcoin back at around 121, 122. I mean, that would be phenomenal. That would be like fucking throw the green dildos to the sky, baby, because this bull market's on, and we should be getting ready for a new all-time soon after that. But in the event that we do get a red November, is it red October or red November? No, it's got to be red October. Red November does not run off the tongues. You probably don't even know what the fuck I'm talking about, but if you're old and you like World War II movies, that's a good one. You know what the best one is, though? Is actually Downfall. Downfall is my favorite World War II movie, although I guess not really like World War II. If I'm talking about World War, like war movies, it's got to be All Quiet on the Western. That is so fucking good. It's so fucking good. Anyways, back onto the topic here. Median loss for losing Novembers is what? About 14%. We already have the open, obviously. 14% to the downside does play rather technically, I should add, to about $92,500. And that, as you will notice, aligns perfectly actually with this price action trendline extension here, which has been governing the lows as of recent. So that would be coming in around that same number. And also we could look at that as more or less a test to the yellow 21 EMA on the monthly time frame as well. So there are a lot of confluent factors in the mid to low $90,000 territory. I do think that there will be bounces obviously along the way as well. And again, these are just, monthly statistics right here. But let's go into the fun stuff. Let's go into the Bitcoin November lows. So the date of the month that we typically see the low of the month on, and then we're going to bifurcate that data between positive closing Novembers and negative closing Novembers. And in the event of a positive closing November, when Bitcoin is positive for November, we see the low of the month around the end of the first week of the month. That would be on just after, day number 7 on average. On the other side, when we do see negative closing Novembers, we typically see the low of the month around the end of the third week, on average the 20th day of November there. So just keep that in mind. Basically, if you see Bitcoin make new lows after the first week of November, after the 7th, which will be, I believe, in just a few days now. Yeah, that'll be on Friday, actually. So if you see Bitcoin trade lower than that, then the likelihood of this being a negative month, it grows greater and greater and greater. Anyways, what I'd now like to go to is the Bitcoin open to November open to low. So now we are going to take the open of the month for all historical Novembers and measure the open versus the low of the month, just the lowest traded price. So not the closing price, but the lowest traded price, which will naturally be greater than, the closing price no matter what, pretty much. Anyways, and then we'll bifurcate that data between positive and negative closing Novembers. Just get an idea of, what's the best case scenario, or what's like a realistic best case scenario for looking for downside from the open of November, even if it's a positive closing month. And in that case, the average and median both at around 5%. On the other side, very bad, by the way, but for negative closing Novembers, the average and median are, close to about 30% differential. That would be pretty fucking ugly, to be honest. But anyways, 5% is bad enough at big numbers like this. And seeing as we already have the open of November at 108,650 or so, 5% to the downside would put us where? Would put us basically at around exactly where Bitcoin is at right now, at about 103, 104 region. So I think that deserves some consideration. Basically what I'm trying to say is, if you expect this month to close green, you pretty much are looking for a low here, today's low already, and not much more further down. Now, as far as outliers go, we've only seen two times. About two times where we've seen a greater differential than about 5%. There was in 2012, 2014, both at around 7.5 and 630%. And then in 2017, there's actually a pretty big differential at about 1470. But again, I would say the 1470 is certainly an outlier. 1470 to the downside would, of course, put Bitcoin pretty much smack on that trendline extension at around $94,000 for Bitcoin as well. So, if it did play down around there, I guess it's possible, but it is a lot less likely to be a positive closing month if we do see a move that far down. Of course, on the other side, I guess we can measure this out, but I don't want to scare anyone like too bad here, because I don't necessarily think that we're going to see a disastrous move like this. But if Bitcoin were to play out a traditional negative November, then 25 to 30% to the downside puts Bitcoin back in a 7-handle territory, back down around here. I think at that point it's pretty easy to say that the bull market is over if that happens. Yes, there would be bounces along the way. It's not going to happen all in one fucking dildo. All of the people who are talking about moon today and doom today, they're all fucking wrong. Okay, it's a very, very simple way to find out if someone's just completely talking out of their asshole, because that shit almost never fucking happens. Almost never, except for the once in a blue moon black swans, which again, by definition, they are black swans. Anyways, my point is that if you are bearish, there could be significant downside for sure. But even if you're bullish, you kind of are expecting things to turn around relatively soon. I would say really no more further down than like 98 or 99,000 bucks. We'll go over why a little bit later. Anyways, that is your monthly statistics right there. Now let's get into several other things that have occurred now since we have the new open for November. And remember, November didn't just start a new monthly period, but it's also started a new 2-month period as well, a bi-monthly time frame open. And first things first, I want to bring you over here to the RSI chart and just acknowledge that, there is 1, 2, 3 drives of bearish divergence come off these last few highs here ever since, the highs of 2024 March connected with the highs in January of this year. And again, the highs in June of this year, and even this little stutter step promote recently in September as well. So overall, this is not good. This is not good. Generally, bull markets have ended on bearish divergence in the past. Now, again, I am not taking the stance that I believe the bull market is 100% over right now, but I am taking the stance, as I have been for the past few weeks, that we've seen Bitcoin top for a long time. We're likely going to see, or for the short term, medium term, very likely sideways and down at best. And I don't really have any major reversal point in mind just yet. I want to take things as they come in right now, just down. Just let the trend be your friend. The trend is to the downside. I've also heard some people call this bullish divergence over here. There is not bullish divergence here. This is just like straight up fucking TA 101, because you can't have bullish divergence when you have higher highs, higher lows within the context of an uptrend. You could have hidden bullish divergence, but the RSI oscillator is not making lower lows. Therefore, there is no divergence possible at all. That would be more appropriate for accommodating an upside, at least in the short term. This is downside. Also, on top of that, the crown oscillator, which admittedly is still very much in its developmental phase, but it is showing some promise now. We do see the monthly crown oscillator starting to turn down. It's crossed to the downside officially for the first time, basically since the last cycle ended. And we are getting the purple dots of destiny over here. And if I could even go as far to say that all prior market cycles have ended on this crossing to the downside. And we do have more or less a trendline regression coming in from these last few highs here as well. Not perfect, but it is kind of there. That does make me, again, more on the, I don't want to say concern side, but just, look, I'm not bullish right now. I'm not bullish. Bitcoin can bounce. It can bounce a lot as well. I don't really think it's going to in the short term, but ultimately, I don't think that Bitcoin's going to be making new ultimate highs anytime soon is what I'm saying. So yeah, that is angled to the downside. We got, again, multiple drives of bearish divergence there. I think the bi-monthly also has potential bearish divergence building here too. It does have potential bearish divergence building here. It is obviously on significantly lower highs than the last few highs, but it would need to confirm this as a local high right now. It's a little bit too early to say that. If you are super aggressive, you could look at that as already confirmed because you did see a lower traded price than the previous potential reversal dildo right here, and you've actually had a couple of those in the row. A couple of shooting star dildos in your face. But if you want to go by the book, which I do think is appropriate when you're talking about higher term timeframes, you want to see at least a closure below the lowest traded points. So that means we'd have to wait until December, closing below about 103.5. It's a long way left to go. Obviously, more aggressive people will not wait for that. That's your prerogative. Anyone can do whatever the fuck they want to do, basically. It's completely fine. It's a free market after all. Anyways, yeah, so we got that. On top of this, we do see that the monthly MACD is drawing really fucking close to each other. In fact, we will get our first cross to the downside since January of 2022 if Bitcoin finishes November below 97,450. Now, it's a very long month left to go. It literally just started. We're not even 1 week through, but it is there. It is something to keep an eye on. And yeah, if Bitcoin is below that pivot by end of November, you will see your first MACD cross the downside, which has been a pretty damn good indication of, cycle being over in the past. And I should also add that in every prior case, the cycle high was already in for at least a couple of months before that cross to the downside happened. And on top of that, you'd also have 1, 2, 3 drives of bearish divergence on the MACD histogram as well. So, you got that plus RSI divergence. Plus over here, when we go to the monthly stochastic oscillator, we are seeing another cross to the downside for the first time since February of this year, before the last major correction, I should add as well. Also very likely going to be losing the critical zone here, which is not a good sign. And the current momentum pivot is $122,000 US. Basically, Bitcoin has to make a new all-time fucking high for this thing to turn around. I don't think that's happening right here. And on top of this, you also do have bearish divergence between the highs from 2024 and the highs presumably in October of this year. So yeah, again, keep your eyes on that number because 122 is quite far away. But hey, Bitcoin reclaims that by end of month. I'm going to be bullish as fuck. you'll hear, you heard it here first. But as of right now, that's not looking too hot, especially with very, very low volatility reads like this. On top of that, and maybe a little bit even more important, being that it is a higher term time frame, the bi-monthly time frame is also crossing to the downside. Again, it's a very long period left to go. It just started, so it won't end until the end of December. But this one will actually confirm a cross to the downside for the first time since, again, July of 2021. If Bitcoin finishes December below 104,350. And again, I will show you what has happened the last few times we've seen this one cross the downside in these, in these periods. It has more or less called either at or at or around the cycle high, So again, these are not necessarily bullish signals as of right now. I mean, they're just not bullish signals. But again, I would prefer to see the period end. But I just want to, again, bring this into the sort of consciousness here that there is good reason to believe, especially if you believe that the 4-year cycle is still valid, that, the cycle highs are in. And at the very least, we shouldn't be expecting anything significant to the upside anytime soon. But like I said, I'm not personally of that opinion, but I definitely respect the people who do believe that, because there is good reason to believe, there is data to support that. And at the end of the day, the 4-year cycle has not officially been broken, and we won't really know until hindsight, to be honest. So, that is kind of the issue with that. Anyways, on top of all of that, we do, whoops, I actually did not bring it up over here, but let's go to the HPDR for the monthly as well. Just one moment while it loads in the background. There we go. Yeah, the monthly, again, did close as a rejection of the median. We've already tested the 38.2 level to the downside. There should be, something of a bounce attempt kind of where we're at right now. But if this area fails, the 50% level becomes the next sort of major area of interest. That's all the way down at just below $93,000, which, if you do recall back here, that is in alignment with this price action pivots trendline extension. Yes, I realize I'm not on the regular scale, which would be a little bit higher, but I'd say anywhere between both of those is fair game. So for the linear, it'd be about 96. For the log, it'd be around 92, 93. So we see a few things kind of come in around that vicinity. So I do think it's worth marking off on your charts as an area of interest, if we do see the rest of these fail. And by the way, for the people who have the price action pivots indicator, and for the shorter term time frame scalpers, similar to the historical price action statistics indicator over here, price action pivots you can treat in a very similar way as well for any first test on basically any time frame to one of these boundaries, whether it be this extension over here or this extension over here. Almost always you will see scalpable plays on the first pass. Are they going to be home run plays? No, they are not. Although some are, but they are not designed to be. It's just scalpable bounce type shit. So if you're really like chomping at the bit for like an hourly time frame scalping strategy, you could probably work something out like this. I mean, shit, you just saw another one right here which bounced up more than $1,000 nearly instantaneously. Not always going to be that perfect, but yeah, it does happen. This is an hourly time frame. So if you are in the market for as more of a short-term scalper, I'd really highly suggest looking at the price action pivots indicator and of course this one as well. But I've been given this the historical price action statistics a lot more airtime recently, but both of them can be used in that fashion, and they both offer 7-day free trials. So at the very least, it'll give you a workable, valuable edge. You still need to figure out an actual trading strategy to accompany that, but at least you got, in my opinion, the most difficult part of that equation solved. You actually have a real edge, which most people, just drawing fucking lines or just guessing to begin with. Anyways, back on a topic here and moving down my list. So now let's go over what I believe would be at least the first objective signal that we might be seeing the end of the downside, at the very least for a short-term / medium-term move. And what I'm going to do here is I'm going to go back to the Tether dominance chart, which has been treating us really well. And on the Tether dominance chart, we've been monitoring. We're a fucking monitor lizard right now. This long-term trend line right here, which has been governing the last few highs for the Tether dominance chart. And if you're not familiar with the Tether dominance chart, it basically plays opposite of Bitcoin. So it can help provide some extra added confluence to signals that we can verify on Bitcoin itself. And basically, if this goes up, we expect Bitcoin and crypto to be down. And when this goes down, we expect the opposite, Bitcoin and crypto. Well, Bitcoin to be up, crypto, most of these things are just fucking garbage. So they probably just go down anyways. But as it stands right now, I would not really be anticipating that this current move to the downside is finished, is done, is finito until you're at least getting up to this trendline area here, which is currently at around 573, 575 region. Yeah, let's just call it 5 3/4, 575, easier to remember. So as long as Tether dominance is below that number, I would still be anticipating that downside is just more likely in the short and medium term. Yeah, there might be short-term bounces, but they're unlikely to be any sort of, meaningful reversals. If and when Tether dominance does get around here, I would at the very least be expecting a big fucking bounce for Bitcoin, and that could be the reversal point for this move if indeed this market is still bullish. At the very least, it should be a bounce, but could be a reversal, potential to be a reversal. Until proven otherwise, basically. And of course, if we see this, travel up through there and really start to settle above, 590 to 6%, I think that's as good a signal as any that, this market cycle is finito for a long fucking time. So yeah, that is there as well. But I'd still, I'd still give the bulls their fair share until proven, that it's just not that way. Just because, in my experience, it's better to go with the major macro trend. Now, this undoubtedly wants to come down here. It's just, keep in mind that your last macro high or low was 74,000 and change. So it's got a long ways to go in order to really destroy that. It could be that this thing comes down, I don't know, settles somewhere around here, whether it's high 80s, low 90s, whatever it is, bounces up, goes sideways for a while, grinds it out, gets everyone super fucking bored, and then perhaps tries an upside move. I think that is actually possible. So I wouldn't really commit to one side just yet, but I do think that there is more downside, just again, to be super, super candid. Anyways, on top of that, we also do have some of our setups continuing to show some lower targets here. We can go back to our famed and prized setup, which is, in this case, the 5-day red moving average crossing to the underside of the yellow moving average. We've seen this happen many a time in Bitcoin's history on CME, also on spot price action as well, but this one is newly formulating and will fire off officially relatively soon. And anytime that we've seen the red moving average cross the downside of the yellow moving average, there has been a minimum test initiated to the green moving average every fucking time. In fact, in this case, in mostly profitable manners. Now, again, I want to state the obvious to anyone with a brain here, but for the people who don't have a brain, please listen very carefully. This is not a good trading setup to trade. You should not trade this setup. For fuck's sake, you goddamn moron. Like, look at it. This is not fucking optimized. Holy shit. But it's really, really good for keeping us honest on YouTube with directional analysis bias, saying, hey, when we have one of these crosses active, we just shouldn't be bullish until fulfilling that test lower at fucking minimum. And right now, that green moving average is at $99,000. So I do think Bitcoin will hit $99,000, whether it's before the end of this week or before the end of next week. I don't fucking know, but it's very likely going to hit there. And I just wouldn't be like, for the people who are thinking, oh man, I read in Warren Buffett's handbook that you should be greedy when others are fearful, and I'm really fearful, and I don't know about anyone else, but I'm fearful, so it should go up right now, right? I should buy, just whatever makes you feel good, right? Like, duh. Anyways, for the non-redax out there, this is not fearful at all. We are not experiencing any real fear at all right now, to be honest. I mean, like, Jesus Christ, fucking macro uptrend. Like, anyone who's been involved in this asset for even a year now is fine. Well, maybe not exactly fine, but they're still actually a little bit in profit. More than 1 year, you're looking pretty fucking good. Anyways, yeah, so I do think things will come down somewhere around there, and maybe that is the next major low. I mean, Bitcoin has been putting in the lows around that major moving average, the 55 here on the 5-day throughout this whole cycle. So it's possible for sure. I'll still hold my breath, but hey, if you are super bullish, I guess that would be the sort of area that I'd be looking for. And yeah, it has dropped a little bit further than that in past times as well. Now, I do want to state that we are using the Quant Prime service to backtest this particular setup right here. You can get data on this as well, very, very simply. This is, like I said, not like a great trading setup or anything like that. But for the more advanced people out there who are looking to create a closed loop system and perhaps even have it automated as well, check out the Quant Prime service. It's free for 7 days as well. We pretty much offer everything for free for 7 days just to give people a taste. You decide if it's for you or not for you. I think for the people, though, who do have experience, this is it's a tool that I can't live without, to be honest. Anyways, yeah, that is pretty much it for me. We can go take a quick check-in on the quantum wave bands. I'm proud to announce that the last trade was a win right here. And more importantly, did not take any trades on this nice drawdown all the way from 111 to where we're currently at right now. It did just open along right here. I don't know how I feel about that one, to be honest. I think this one might be a loser as well. But again, if you are going to be trading something like this, which is more of like a black box done for you trading strategy. So this is more for noobs compared to the Quant Prime service, which is certainly not for noobs, at least in my opinion. You know, you can do whatever the fuck you want to do, but I would not suggest it to noobs. This still does have that beautiful up and to the right equity curve. Again, that is the beauty of when you follow an actual strategy with a real edge over time. You don't have to fucking second guess yourself or anything like that. You just have to focus on not fucking over leveraging yourself so that you don't get fucked when this thing does take losses, because it will take losses, especially big losses, you know, when you see major reversals. But at the end of the day, if you can stick with it and make sure that you don't fucking die during those times from over leveraged bullshit, well, you actually will reclaim that over time. And we've shown that time and time again now through all sorts of diverse market cycles and market movements and everything like that. And I think it's just really a thing of beauty to behold. So again, if you are newer and you just want, you know, some training wheels to kind of at least keep you on track and at least keep you from not getting wrecked, quantum wave bands, again, is the one that I'd really suggest for those people. And I mean, shit, even for advanced people as well. I mean, it's like most people can't even come up with a profitable strategy to begin with. So yeah, it is there for you. And again, 7 days for free. And we're going to end things on that note. It's been an absolute pleasure speaking with you on this nice little Tuesday morning here. Again, keeping up with the long-term monthly analysis. Like I said, I've created a playlist now on YouTube where I'm going to put all of the monthly analyses in there and update them onwards and forwards. I just want to say at the outset, basically like almost all of last year played nearly perfectly with every fucking monthly statistical analysis. This year has been certainly less so, although there still has been a lot of value to be gained from them. But this year has been a little more difficult using that data. Last year was, I mean, it was crazy. It was almost perfect every fucking month. It kind of blew my mind, to be honest. Anyways, we shall end things right there. Wish you the best as always. Take care, much love, and see you hopefully Wednesday for another live stream action.